Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. Guys, this week's topic is how to read candlesticks like a pro. A lot of you guys are just, I don't know, you're just messing around with stuff that's not important. So today we're going to talk about multiple concepts converging in an area, how effective and important bottoming tails are, especially when they have volume and they're at areas of support and resistance. I call bottoming tails pictures of money a lot of times because when you get a good enough bottoming tail and a large enough bottoming tail, they work about 90% of the time, right? From my experience, they seem to work about 90% of the time. So when I see those, man, it's one of the first things I look for. And if they happen to happen on a double bottom retest, or even if it's a breakout, guys, with a nasty shakeout bottoming tail, oh my gosh, hop on board that as fast as you can. So today's lecture, we're going to talk a bit more in detail. It's a long, it might be one of the longest lectures I've done. It's over an hour by a good bit, an hour and 10, hour and 15 minutes. I know you guys, the millennials and the Gen Zs, you have an attention span of like 12 seconds. I think we're at Gen Alpha now, aren't we? Either way, the lecture is long. It's chock filled of golden nuggets, not the kind you get at McDonald's, like the good stuff, like Chick-fil-A nuggets. So stick around and seriously watch it. I'm not going to be doing this forever. Plain out, I'm not going to be doing it forever. One day, I'm just not going to be here. And you're like, where'd Jared go? Where'd the channel go? Poof, gone. Sooner than you guys think. Can't give you the timeline, but it's already been written. So watch this. How to read candlesticks like a pro. Golden lecture, guys. If you like these videos, click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to read candlesticks like a pro. I haven't done this lecture in a bit. And I've added to it, which I typically do. If there's a topic I've done in the past, I typically add some new information to it, and that's what I've done with this one. I find it fascinating how traders approach the markets, because it's interesting, because I was just reading an email an hour ago before this lecture, and it was about somebody overcomplicating their process, talking about, I don't understand how to properly integrate multiple time frame analysis into my trading. Guys, just to be clear, and I'm not going to go off on that topic today, but multiple time frame analysis doesn't mean that every time frame has to have the exact same pattern. That doesn't mean that there's a daily buy setup, a 15-minute buy setup, and a 2-minute buy setup. It simply means the daily time frame should be in an uptrend if you're going long. So now you've checked that box, higher time frame in the trend I need, and then you drill down to a lower time frame, 1 minute, 2 minute, 5 minute, 15 minute, and look for your entry pattern, right? So all the time frames don't have to match the same picture, but they have to match the same trend. All right, so it's not nearly as difficult as people think it is. They're like, well, geez, Jared, it doesn't have a daily buy setup, so how could I take it on the 2? It doesn't have to. It just needs to be in an uptrend, a good uptrend, and that's subjective, but we have rules for what a good uptrend looks like. All right, my point I'm getting at is a lot of folks, they overcomplicate trading. It's really actually not that difficult. Are there nuances to it? Sure there are. Are there a lot of things to understand and know? Sure. Order entry, level 2s, psychology, oh, I get it. But when it comes to candlesticks, a 5th grader could learn this stuff. Not kidding you, a 5th grader could learn this stuff. But you guys are just, I think what the problem is a lot of people act like teenagers. Instead of just listening to what I'm saying and doing it how it's taught, they're like, well, I know better. No, you don't. You just don't. You don't have that experience yet. If you've been doing it 5 or 10 or 15 years, then you might have that experience. If your P&L is still red, then you don't have that experience. Right? So my point is today's lecture, please pay attention to it. Some of it will be simple, some of it will be high level. But no matter where we are in the lecture, it's helpful, useful information that you really shouldn't be deviating from. And if you are, you have to ask yourself why. I'll give you an example. Now, I'm not trying to put this person on the spot, but somebody in the chat log asked Unmol 20 minutes ago, what should we do with TAN? Well, what do you mean, what should you do with it? If you're in a trade and you don't have a modus operandi for exactly what the future of that trade looks like, then you are a gambler and not a trader, right? Your plan says buy here, stop loss here, target here. And in between those things, Your plan has a management. In between those areas, your plan has a management. And if you don't know what to do, you don't have a plan and you're a gambler. You shouldn't be asking someone else what you should do. That means you're not following your plan. If you want to ask them to review the trade you took because, maybe you're a little uncertain about it, then that's fine. But you don't ask somebody what you should do while you're already in a trade. Your plan tells you what you should do. But you know what the truth is? The pink elephant in the corner is most people don't have trading plans. They just think that some Google advertisement, you're going to come in and you're going to make a dog load of money because some other person turned 500 into 5 million. You think you're going to do the same thing. It just doesn't work like that. So pay attention to what I'm going to say. And you know why I said all that? To preface into and to segue into, when will the insanity stop? When will it stop? Please, when will it stop? This one is a doozy, and it just happened, and it proves people just don't learn. They just don't learn. It's like you can smack them over the head 10 times, but they still need the 11th time, the 12th time, and the 13th time. So this week's installment of When Will the Insanity Stop just happened recently. Bam! Oof! Ouch. $305,000 on GameStop. That was May 14th. That was 8 days ago. Like you didn't freaking learn from 2 or 3 years ago. You just knew better. Covered calls. Ouch. Ouch. Oops. Whoopsie. I mean, what? This is what home run trading looks like without a plan. This, more aptly put, is what stupidity looks like. Now, I'll be honest with you guys. I'll be honest with you. I don't care if this person made $305,000. Doesn't matter to me. It's pure gambling. Right? This person clearly doesn't have a plan. How do you lose $305,000? Right? Now, the first thing some people will say is, well, maybe that person can handle it. Yeah, that's why they're complaining on Wall Street Bets. There's a whole nother piece that goes to this that I didn't show. They're complaining about what happened because they can handle it. No, if this was a normal risk unit for somebody, they would just call, oh, I lost 1 R, I'm moving on. But they were complaining about it. This isn't fair, this. Stop, spare me, cry me a river, just do it to somebody else. This is a bunch of BS. But the reason I show these, and the people in the chat room know this, but the reason I show these When Will the Insanity Stop segments is to scare the bejeebies out of you guys, to scare the shit out of you, so that you don't ever do it. That's the whole purpose, is to learn from other people's mistakes. Unfortunately, we have a lot of teenagers, not actual teenagers. They act like teenagers. And that means your parents, me, tells you, don't do it, don't do it, don't do it. And I show you why you shouldn't do it. And you do it anyway. I have kids. I have 3 of them. All the time. Don't do it. This is what's going to happen if you do. Magically, they end up doing it. Okay. You got to learn the hard way. You're one of those. Traders are like this all the time. Traders are like this all the time. Use a stop loss. I got stopped out by a penny last time. Okay, well, this time it's not coming back. It's just going to keep going. Why? Because Murphy doesn't like you. That's why. Learn from this. All right, let's move on. Okay, let's move on. Martin, I don't understand a lot of things in life. You know, like when someone cuts you off and then flicks you off at the same time. I don't understand that either. There's a lot of things. I don't understand why insider trading is legal in Congress. There's a million things I don't understand. 99.99999999999% of women in the world, I don't understand. So it's just the way life goes, Martin. Right? It's just the way it goes. You just deal with it. It is what it is, and you try not to be that person yourself. You try to learn from other people's craziness and mistakes and try to be better yourself. That's all you can do. Focus on you. The rest will take care of itself. Now, some quick misconceptions, okay? I'm going to go through this quickly because I want to get into the charts, all right? I want to get into the charts. People think you can't go broke taking profits. I proved today you can. I did. I proved today you can. right? Because today I looked at Meta, good trade, by the way. It hit full target. Great job if you held it to full target. And I was supposed to do the same thing, and I took about $2,300 to $2,500 from Meta, and I should have taken $6,000 or $7,000. Now, why is that important? Why? Some people are like, well, geez, Jared, why are you complaining? You made $2,400 on Meta. That's good. Yeah, well, the next time I take a trade and it stops out and I lose $3,000, 1 for 1 is a tough way to make a living. So if you take one trade and win and one trade and lose and you're break even, that's generally not great. But if I had made $6,000 from Meta and next time I take it I lose 3 or 4, then that's okay. I'm still up. So this is exactly what I did on Meta, is this mantra exactly today. You can't go broke taking profits. It's exactly how most people go broke, is by taking profits too soon. Tell me I'm wrong. Have you never been there? You take full stop outs, right? You lose your full loss. You lose your full risk. But when the profit starts going in your direction, you start nickel and diming. You got 1,000 shares, you take 100 here, 100 there, 100 here, 100, and all this. By the time it hits target, you got 200 shares left. And instead of making, I don't know, $1,000 on it, you make $379 on it. That's exactly how most traders go broke. Okay? Getting to break even is the goal. This is merely a mental crutch for most traders. And the reason I say most is if you have a plan, I know Cliff and I have the same or similar plan. I move to break even because it's more profitable at a certain point. My statistics prove this. Right? Now, that's not true for everybody. A lot of people want to get to break even because it feels good. Not because it's actually beneficial. They want to get there because it feels good. Oh, I can't lose. Yeah, but what happens if it tags you? You're out at break even. Maybe it goes minus a quarter R and then rips and hits target. Well, break even wasn't so good on that trade, was it? So you really have to be tracking your trades in a spreadsheet to understand if break even is just a crutch or if it's actually beneficial. Okay, most people do it based on fear. The fear of loss is stronger than their hope to gain. Read that. Fear of loss, let's highlight it. Fear of loss is stronger than your hope for gain. Right? Let your winners run, cut your losses. Okay? Well, how do you do that? How does that work exactly? Like, I love that mantra. You know, it's not where you get in, it's where you get out. Really? Well, how do you know that? Are you Nostradamus? Are you Nancy Pelosi? Or are you my wife? Because they're the only 3 people I know that know what the future are. All right? 2 of those 3 are perfect. Okay? And the other one is not, it's Nostradamus, right? My point is it sounds so easy, so cliche, like, well, duh, let your winners run and cut your losses. You have no idea what that looks like. In one trade, bar by bar works like a champion. And in the next trade, bar by bar gets shaken out. In one trade, you're up like 5R on 15-minute pivots, and it comes all the way back and stops you out because there's no pivot in between. And on the next trade, the 15-minute pivot just keeps going and goes to a power trend, you make 12R. How do you know which is which and when it's which? You don't. It's the point. Where am I going with it? You put a trading plan together and you follow it. And then you back test other management strategies and other plans and see which one makes the most sense for your style of trading. And that's the key here, for your style of trading. You're not trading somebody else's style, you're trading your style. So without back testing these things, without tracking these things, you won't know these things. Using stop losses only stops you out of winning trades. This is an interesting mantra. You know those people who say, I'm using a soft stop? They're like, well, when it gets to that area, I'll probably get out. Probably get out. I don't know if you guys saw me today, but I use bracket orders galore. The second I get into a trade, I just click the bracket order. Done. Why? I don't have to worry about it after that. Right? I can slide that order up and down if I need to, but that's it. This is my target. This is my entry. This is my stop. If my computer goes down, if it breaks, if a bird hits my window and I get flustered, if my, I don't know, get blue screen of death, internet drops, whatever, it's on the broker's website or on the broker's server. You're good. Go walk your dog. If not, you're in trouble. We have a story of that. 2008, somebody lost $20,000 walking their dog. True story. True story. MF was the stock. Walked their dog. News came out that they were going to go bankrupt. Blew right through their stop limit order, not stop market order, and they lost $20,000. Trade they were risking about $1,000 on. 20 to 1. 20R on that. Ouch. Ouch. The trend is your friend. Ride it. Management is a give and take. Is your personality ready for this? Now, I'm not saying this is wrong per se. The trend is your friend. You should try to ride it. However, guess what? This doesn't take into consideration your personality style, your time constraints. What if you only have an hour to trade and you're on 15-minute charts? Well, that's not going to work so well, is it? What if you want 5R targets, but you're trying to trade 1-minute charts? That's not going to work so well either. You have to balance this business out with your time constraints, financial constraints, personality constraints, all of those things. So while the trend is your friend and you should try to ride it, you might be a hit and run person. You might be a 3-bar play, get me 50 cents, walk away person. Unmol does that with options every day. I would say, and you guys can correct me on this, I would say 70% of his options trades go more than his exit. I'm serious. I would say at least that. 50 to 70%, 60, 70% go more than where he exits at. But he takes his 30 cents, moves on. Why? That's his plan. That's his plan. Today, 3 for 3. The guy rarely loses. He bats like 95%. It's craziness. So these misconceptions can get you in a lot of trouble. A lot of trouble. And let's be honest, you don't ever want to be here. Right? You don't ever want to be here. Okay? Now, let's talk about some important stuff that has to do with trading. Okay? Well, that did have a lot to do with trading. Now, this is where I lose half the people. You're like, Jared, I know. I know what a green bar is, and I know what a red bar is, blah, blah. Bore me to death, Jared. Paint dry. I get it, but you can leave. I don't really care. It's up to you. What's the difference? Are they the same? Well, they're not the same, right? We all know what green bars are. We all know what red bars are. And in professional trading strategy, we talk about the difference between red and green bars, okay? But they're not the same. See, this green bar isn't necessarily strength. Now, you're saying, well, by definition, it is strength, Jared. By definition, it's strength. Yeah, by definition it is, but contextually it might not be. If this is the 7th green bar in a row up, and it's a wide range green bar at prior resistance with a huge volume spike, guess what it isn't? Strong. It's almost definitely going to pull back. If you're 7 bars up, the current bar is wide range like this bar, and you have a pivot resistance to the left, and there's on big time volume, you're probably going to get a pullback. You ever wonder sometimes when a stock is up 5 or 6 days or 5 or 6 bars in a row, and you literally say to yourself, who's buying that? Yeah, novices, idiots, fools buying it. What typically happens is that peekaboo is just a little higher, they think they're good, and then they get smacked. That's what happens. So you need to understand the difference between these bars contextually, not just red and green. Okay? Also, when we look at the top and the bottom, note how it says support, resistance, right? Resistance at the top, support at the bottom. On the left, there's tails, right? Topping and bottoming tails. On the right, there are none. What's the difference when we see topping and bottoming tails on the left and not seeing them on the right? Talk to me. Little audience participation here. What's the difference here? I mean, the range is the same, right? The size and range, the overall range is the same. But one bar has topping and bottoming tails and one bar doesn't. What's the difference there? What's happening? What's the difference conceptually here? 2-word answer would be great. Oh, thank you, Matt. That's the exact answer I was looking for. You're correct, Brent and JW. You're mostly all correct, but Matt's answer is exactly what I'm looking for. Battle tested. That's it. Battle tested. Okay? Depending, again, on where it happens. We know that on the right-hand side here, this is just buyers, 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 buyers. From the bottom to the top, all buyers, buyers, buyers. Here, we have a tug of war going on here. A battle going on here. Buyers and sellers are fighting it out. Well, you've heard me use this analogy before, and I'm going to use it again. You can have an undefeated champion, right? But if they've never fought anybody, how do you know if they have a chin? Think about the analogy. You may not be into boxing, but if you have an undefeated champion, they may be that good. They might be. They just might be that good. But if they've never really been hit, How do you know for sure? So on the left-hand side, we have a battle. The question is, who is going to win the battle, right? I want somebody that has some experience in the field, some war experience. I don't want a bunch of novices out there next to me watching my back. I want people that have been there before. So for me, battle tested means a lot. Now, does this mean that over here on the right that this is garbage? No, it doesn't mean that at all. It doesn't mean that at all. It just means I'm getting a clearer picture on the left-hand side because there was a battle fought and I know who won or lost the battle. The other question is pivots, right? How is a pivot created? So I'm going to move along here to the next slide because I could probably spend another hour on that slide. I'm not kidding with you. The last slide I could probably spend an hour on. So which one has, quote, more support? Both are the same on the way up. Green, 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 green. 5 green bars. Pull back, red, red, red. And I have a line here that says support on the left, and I have a line here that says support on the right. So which one has, quote, more support? Now remember, to be clear, I don't know the future. I'm judging this off of current information because that's what technical analysis is, using past price action to help predict future price movement. That's what technical analysis is, right? Well, I know on the left this stock was just strong. Up, 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 right? Pulls back, and to be quite honest, there's nothing wrong with this. I don't want you guys to think that on the left-hand side here there's anything wrong. There's nothing wrong, okay? I'm not trying to suggest there's something wrong. I'm just simply saying, compared to the right-hand side, it's easier for me to gauge the support level compared to the left because of this bottoming tail. Sellers tried to sneak in here, right? At one point, this was a red bar, right? If I can make this happen, at one point in time, right, that looked like that. It did. At one point in time, that looked like that. This looked like this. Okay? At one point in time. And then, bam. That happened. Right? So a battle was fought and red turned into green. They got smacked in the mouth and they said, whoa, okay, I see. And then they moved back up. So now I have a reaction here. And let's go one more slide. If I look, the reaction on a lower time frame has a red bar on it. Right? Now this isn't the exact same chart, but you're understanding the concept. Time frames are just arbitrary. Right? Time is not a form of support. Price action is. What is happening at that time, in that moment in time? Right? I mean, guys, you can use a 1-minute chart, a 2-minute chart, a 3-minute chart, a 4-minute chart, a 5, a 6, a 7, an 8, a 12.5-minute chart. I don't care. It's arbitrary. The time is arbitrary. Now, do we need time? Yeah, we do. But, for example, I trade a lot of 2-minute charts. Cliff trades a lot of 3-minute charts. Who's right, who's wrong? Neither. Both. It's just arbitrary, the time. So my point, though, is that on a 15-minute chart here, we had a little bottoming tail. That bottoming tail on a 15, that bottoming tail on the 15 becomes a little red bar on the 5. So a bottoming tail in one time frame is a pivot in another. The question is it a significant pivot? A bottoming tail in one time frame is a pivot in another. Okay? Just because the clock ticks from 4 minutes to 5 minutes and a new bar forms does not automatically make it a new area of support. A lot of people think, oh, the bar finished, so now the previous bar's low is some level of support. Why? Why? Think about what I'm saying here. See, let's go over to the left-hand side for a second. Bear with me, okay? If I lose you, let me know. I shouldn't. It's pretty simple. Right here we have a 15-minute bar. And right next to it, right after it, another 15-minute bar. Guys, what happens when I can't change that one. Annoying. What happens when I go to a 30-minute chart? When I go to a 30-minute chart, doesn't it just kind of look like that? Right? If I went to a 30-minute chart, those two bars would simply be one bar. Yes? So why then should this green line be some area of support? Why? Why? It's just time. The 16-minute chart looks a little different. The 14-minute chart looks a little different. And the 30-minute chart just has one big-ass green bar on it. So why should that be any appreciable level of support? The answer is it's not really. Unless there's some type of battle being tested happening in there, and you can actually go to a lower time frame and see it. But when you go to the lower time frame here on the 15, you drill down to the 5, it's just green, 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 no battles tested. None of these bar lows are any appreciable level of support because nothing actually happened there. Up here, something happened. So now, it tends to look like this. Same thing as the last slide, but we added a 2-minute. The 15 is up, 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 and then we get a little reaction. On the 5, it's one red bar. That bottoming tail is one red bar. On the 2, it happens to be a 3-bar pullback. And it becomes a buy setup. Key point, a battle occurred, which means this area has been tested, confirming who is in control, in this case, the bulls. Okay, so now you can look and go, okay, if you're managing a trade or looking to get into a trade, both are helpful. Let's say twofold. Let's say you're already in this trade. Now you have a reference point. Wow, big red bar in the market. You have a reference point to raise your stop, right? Let's say you're in the trade on the 15-minute, and let's say this, you're up here now. You're up here. You're like, I don't have anywhere to raise my stop loss. Well, you could drill down to a 5-minute or a 2-minute, right? 5-minute or 2-minute. And now you have an area for a potentially raised stop loss. But you know what? You also have a potential area to add or a potential area for a new trade, right? So that little bottoming tail in the 15, you're like, oh man, I've been trying to get in this stock all day. I haven't been able to find an entry on it. Bam, this 2-minute is your entry. Now, would I give it a wider stop than that? Yeah, probably. So think about it. That's threefold there. An area to raise your stop if you're already in, an area to add if you're already in, and an area to buy the stock if you're not already in. All because of the battle that was tested. See what that does for you? It's a big deal. Okay, it's a very big deal. Now, the other thing we want is smoothness. I don't want overlapping chop. Why? Congestion is harder to get through, right? It's harder to cut a cold block of butter than it is a warm block of butter, right? Congestion is not what we want. So all pivots are not the same. You can have pivots. They're just not all created equal. So you take a look at this, right? On the left, we have a nice smooth sequential move up. Higher high, higher low, higher high, higher low, higher high, higher low. Smooth sequential pullback, smooth sequential move up, right? This is much easier to overcome. Now, if you look on the right-hand side, this is not going to be an easy stock to buy into. It's very sloppy. Now, if you're above that area, that could be good, right? There's a lot of support below you. But if you're trying to buy a pullback, this isn't good. You don't want overlapping bars. Why? Think about logically why. Well, every time the stock moves up, sellers come in. It tries to move up, and you're like, oh, that's bullish, that's bullish. It is, until the sellers come right back in and do a 70% retracement. Then the buyers come back up, you're like, oh, that's good, that's good. And then the sellers come back in and do a 70% retracement. So why? Why are the sellers having such a dramatic impact on the buyers? There's only one reason. The buyers are not as strong as we thought, or the sellers are stronger than we thought. Same thing, Buyers are not as strong as we thought, not as committed as we thought, or the sellers are stronger than we thought. That's it. You don't want this. This is not easy to, when you get a pullback from this garbage, you don't take the pullback. When you get a pullback from a nice smooth move, you take the pullback, you take the buy setup. Obviously, there are other factors here. But when you have a congested move up, you don't buy into that congested move. Why? Because there's lots of overlapping tug-of-war battle going on. Why should it stop just because you bought a pullback? It likely won't. Okay? Yeah, both sides are committed, and that's not what we want. When you get into a stock, long or short, there's one specific side that you want committed. Long, buyers. Short, sellers. You don't want them fighting this out back and forth. You don't want an evenly matched battle. You want the buyers to overrun the sellers. Or on the short side, the sellers to overrun the buyers. Okay? True. That's a true story too, Jordan. Potentially. Right? That is a true story too. Now, I always like this chart. I haven't used it in a while. The next one, you haven't seen it yet. I've always liked this chart. I call it reading inside the candle. Many of you have seen it. I believe it's in Professional Trading Strategies, but it's a chart I've always enjoyed because I think there's a lot of novice traders out there that don't ever look inside the chart. And I tell you guys frequently, when you get good at this business, you should be able to tell me what the lower time frame probably looks like. You know how I say to you guys all the time, well, I don't use the moving averages, but I have a really good idea of where they are anyway? Yeah, I can visually, right, mentally, visually see where the moving average is. When I'm looking at a 5-minute chart, I can have a pretty good idea what the 15 and 2-minute look like just by looking at the 5. Am I going to be perfect? No, but I'm going to have a pretty good idea. So, what we have here, and normally, I string this chart together. You guys have seen it done like that, right? I move the 15 on the bottom, put the 5 in the middle, and I put the 2 on the top, and I literally tie this chart together. And then I break it apart. Not kidding. I tie it together, and you're like, oh, that's one chart? Yup. But what I'm doing today, because, for the sake of brevity, is I'm taking an area of the 15-minute chart. We clearly can see a little bit of a downtrend, a lower high and a lower low and another lower low, right? So I already have one lower high and 2 lower lows, very close to a downtrend. Then we get a wide range green bar. Next to the green bar is a pretty good sized red bar and then another green bar. We call this maybe a miniature bear sandwich, right? That's 15 minutes. That's what that looks like, okay? Draw the line, go up. Inside that 15-minute, this is what the 5 looks like. Lower high, lower high, lower high, lower high, lower low, lower low, lower low. Doji bar. Buy setup. That red bar is those 3 5-minute green, or those 3 5-minute red bars. This one red 15-minute bar looks like this on the 5. You have a buy setup here. Now, is this a buy setup you should necessarily take per se? Maybe not. Because you're still kind of in a downtrend here, right? And you're not really changing or transitioning until this pivot is broken, right? Until the top of the pink box is broken. Because you're still doing lower highs, right? So if you were to draw, let's make this easy here. If you were to draw like a miniature trend line here, your trend line would look like that. Right? Your trend line would look like that. So you can't really go long until you've broken the trend line. So taking the 5-minute buy setup would be aggressive. However, it's a sign. It's a signal. It's telling you, hey, I'm starting to pick up some steam. I'm starting to pick up some strength. Right? And if I break that prior pivot high, you might consider me long. That's all it's telling you. It's saying, wait, but watch. Wait, but keep an eye on me. Okay? What do you think about footprint charts on a heat map? I don't even know what a footprint chart is. I'll be honest. I've been doing this 20 years and I don't know. I know what a heat map is, but I don't know what a footprint is. So the answer would be, I don't have an opinion on it. All right? So, saying wait, but watch me. Then you're watching. puts in a higher high, right? Puts in a higher high. That's good. Broke that, failed that little downtrend. That's good. Broke the trend line. That's good. Then the 5-minute has a little red bar. That red bar on the 5 becomes this 3-bar pullback. But it's happening after we failed the sell setup, after we failed the trend line. We broke the trend line. And now, if we do this again, put this here, put this here, we are in an area of support. That was the area we needed to break. The green line used to be the resistance. Talk to me, guys. Say it loud, say it proud. The blank becomes the blank. Say it. Type it. Scream it. Yell it. The blank becomes the blank. Give me 2 letters. I'll take 2 letters. The blank becomes the blank. Come on. 2's not enough. I need more than this. Step up. That's right. The ceiling becomes the floor. So basically it looked like this. Okay? Watch. It looked like that. Okay? This was resistance right here in the red. We broke it. We broke the resistance, the ceiling here, and we pulled back. What used to be the problem is now our friend. What used to be the enemy is now our friend. What used to be the ceiling is now the bottom. Now you're taking a look at this and you're saying, that's a buyable 2-minute PBS buy setup, right? Buyable 2-minute buy setup. Because now the 15-minute has put in a higher high, the trend line has been broken, and we've pulled back 40 or 50% from the top of the pivot here to the bottom of the pivot here. Bottoming tail, doji bar, lower high, lower high, lower high, lower low, lower low. Boom. That's a buyable buy setup in a 15-minute transition. See how different but similar charts can look just off different time frames. And if you look at the 15-minute, guess what there isn't? A pattern. There's no entry on the 15-minute. There's no real entry on the 5 in this orange box. But there is one on the 2. This is how you're using multiple time frames, reading inside the candlestick. Okay? So now let's take a look at some examples. All right. You guys have seen this one too. This is a nice buy setup, right? Nice buy setup. The problem is a lot of people, a lot of traders love to trade in vacuums. And they love to do this. This is what a lot of traders love to do. I don't know why, but they just get caught up in the moment and they don't realize what they're doing. Okay? So, what they're doing, let me explain, is they're looking at this in a micro time frame, and then they're doing this. Okay? Hold on. They're doing this. They're not looking at the higher time frame. Even though they're told to look at the higher time frame, it always says in PTS, look at least 1 to 2 time frames above and below your entry. Above and below your entry. Okay? So they're looking at a 2-minute chart and they're going, oh, it's up 4 or 5 bars. It's got a double top retest. It's got lower highs and lower lows. Right here's your double top retest right there. Okay? Right there. Then it puts in a lower low and a lower high and a lower low and a lower high. And they're like, bam, I'm in a micro downtrend. Let me ask you a question. Are they correct it is in a micro downtrend? Yes or no? Just give me a Y or an N. Are they correct? It is in a micro downtrend. Yes or no? Don't be bashful. Don't be shy. Getting yelled at's not that bad. Perfect. Not a single wrong answer. Don't ruin it, anybody. The answer is yes, they are correct. It's in a micro stage 4. Remember, within macro stages, we have micro stages, right? So when you look at the 2 minute, it's a double top, retest, and failure with a lower low, a lower high, a lower low, and a lower high. We need 2 or more lower highs and lower lows to be in a downtrend. Well, there's my 2 lower lows, and effectively this is going to be my second lower high. Right? It's going to be. But, there's always a but. We don't trade in vacuums. You might be correct with what you're actually looking at right here, right? And you are. You're in a downtrend, right? And you're looking at it, you're like, ooh, right? And this is what traders are doing to justify this stuff. All right, let's pull this out. And they're doing everything. They're doing everything right except one major wrong thing, right? So they're doing this, and they're like, okay, all right, there's the double top. You know, and this is what I'll get in an email. All right, it's exactly what I'll get. Let's just make that orange, and I'll get this, okay? And they'll mark up the chart. They'll do all this cool stuff. And I'm like, Jared, there's the double top retest. Jared, there's the trend line. It's below the moving average. It's below the trend line. It has a topping tail. It has a red bar, change of color bar. It has a narrow range bar, narrow body bar. Oh my gosh, check, 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 check. And they're like so proud of themselves. And then they go, but it didn't work. Why didn't it work? And then I get this long, like 3-paragraph email with a chart all marked up. But why didn't it work? And I just sit there and I just go like this. And I just delete that. I'm like, why do you think it didn't work? Oh, I forgot to look at the time frame. Well, let me ask you a question. How did you forget? And the reason I'm asking is because I don't know about you, but before I take any trade, I have a 2-minute chart, a 5-minute chart, a 15-minute chart, and a daily chart all together. They're literally right next to each other, all 4 of them. It's on my main order entry screen. You'll see it in a second, okay? And they're all next to each other. So did your eyes, they just couldn't move, like, what's that, about a ½ inch of eye movement, a ½ inch of eye movement to move your eyes from the left chart to the right chart? That was just too much work? I don't have an answer for it. You know, it's the way I analogize this. Is that even a word? Analogize. Oh, yeah, that's a good one. Let's put that in. If they can change the definition of a recession, I can create a new word, analogize. Okay? So, my analogize, I'm kidding. My analogy, right, is the forest through the trees. You've heard me say it before. You're so caught up on the branch, the leaves, the bark. You're so focused in a microscope, you forgot to look around you and see what's happening on the other trees in the forest. Is the forest on fire? And if so, get the heck out of Dodge, because pretty soon it's going to surround you and you will have no exit strategy. See, when the forest is a little on fire a little ways away, you're like, if I run now, I'm good. But if you're so focused on the bark, the branch, the leaves, you're not going to know what's going on around you. And then this is what's going to happen. The 15-minute is going to be on a minor price support, bottoming tail buy setup on a double bottom retest. And you're going to get effed. And you're going to stop out. And that's exactly what happened. It's going to look like that. Right? It's probably why they are, Jordan. But, you know, they can only do it for so much longer, if you know what I mean. Okay? This is what you just shorted. Now you're like scratching your head thinking, how could I miss that? I'm not that dumb. No, it was an oversight. Because you got so focused and caught up, you got FOMO basically, right? Fear of missing out. And then you look at this and you're like, that's a perfect 15-minute buy setup. The failure of a pattern in a lower time frame confirms the entry in the higher time frame, right? The failure of the pattern in a lower time frame confirms the entry in the higher time frame. Remember that. Don't put yourself in this position. Don't put yourself in this position. It takes all of a half of a second, 1 second to look at a 15-minute chart, especially if they're sitting right next to each other. Okay? Don't do it. Now, let's change gears slightly. Now we're going to talk about similar things. The similar thing we're talking about is confirmation. Every trade we take, we are looking for a certain level of confirmation. And without it, we don't take the trade. Let me repeat myself. Every trade we take, there's some level of confirmation we're looking for. Whether that's a level 1 gap, whether that's a bottoming tail, a topping tail, a volume spike, a double bottom retest, support, something. There's always a level of confirmation. So I'm going to focus a little bit on bottoming tail confirmations and topping tail confirmations. So we have a gap down, right? Gap down. Stock chills out, and what happens? Right here, you had a big green bar, 50-cent green bar, on decent volume nonetheless. So at that moment in time, you're thinking, well, buyers are stepping up. But not too long after that, this green bar leaves a little bit of a topping tail. It's only about 40% of the bar, but the idea here is sellers crept in, right? Buyers, 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 all the way to 1250, but it couldn't hold 1250. This is the key. Please pay attention. It's important. It couldn't hold 1250. So sellers crept in. You're like, okay. I'm still leaning a little bit on the bullish side because that's a pretty big bar. But I like this idea that it couldn't hold the high. Next bar comes in. Red bar comes in and engulfs the green bar. About 80-90% engulfs the green bar. Wow. Wait a second. Hold to stop the press is Vicky Vale. Why were the buyers unable to overcome the sellers? Because they weren't strong enough. That's the only answer you can give. They're not strong enough. It's already a gap down, and my bias is already bearish. So by seeing the red bar engulf the green bar, what am I getting? I'll give you a hint. Begins with a C and ends with an N. What am I getting when the green bar gets engulfed by the red bar? I'm getting, talk to me, talk to me, talk to me. Thank you. I'm getting confirmation. Confirmation of weakness. Confirmation of weakness. Then it gets even better. Wait, there's more. Sham wow. If you buy right now, I'll throw in the next towel. All you pay is process and handling. It gets better. The next bar takes out the green bar. The next bar stays above 12, but in a narrow range. Why is that important? My risk to reward's getting better. As I see the narrow range happening in the right area, the risk to reward's getting better. Then, topping tail. What's topping tail? Topping tail is buyers losing. That's what a topping tail is. Buyers losing. Right after the topping tail, there's a second topping tail. Buyers tried again, and they lost again. So they've tried one time over here, all the way up to 1250. They lost. They tried again right here. They lost. They tried again right here. They lost. They tried one more time with this green bar, and it took 2 or 3 bars, but they lost. They lost 4 times. Every single time the boxer got punched in the mouth, he brushed it off and kept coming. Every time this stock tried to bounce, it was unable to hold it and went back down to the low of the day. This is confirmation upon confirmation on top of confirmation on top of confirmation. If a trade like this stops out, you just tip your cap to the market and say, too good, because this is perfection. Perfection. You get in at $12 and you put your stop loss here. I wouldn't put it at $12.50. You don't have to anymore. Originally, you have to put it at $12.50, but now you don't have to. Now you put your stop at $12.20 or $12.25, and you get in at $12. That's it. 12 by $12.25. Boom, it goes 50 cents. You make 2 to 1. Perfection. Now, change gears. Same concept, different pattern. Same concept, different pattern. Now, big wide range bar. Second wide range bar, topping down. Now, in your opinion, if you didn't know the future, okay, let's do this. Now you already know the future, but, okay, imagine that's there, okay. By the way, guys, I honestly, truly hope you do this with your charts. I hope you cover up the future and try to read them bar by bar. That's the only way you're going to learn. Like, it's nice learning from past charts. You have to do it, right? It's required. But it's better when you cover the future and go bar by bar, because that's reality trading. I don't know what the future is 20 minutes from now, but I'm gauging it from past price action. So now what I have is a small gap up, a rising moving average, wide range green bar, and a topping tail. Now, in your opinion, I know you know the future, so it's a loaded question because you know the future. Is that topping tail a sign of weakness, or is that probably just a resting period? Most likely. We don't know anything 100%, but this topping tail you see, given the chart, the information we have, we don't have any more information. It would be great if we did, but we don't. Do you think that this is a sign of weakness, or probably a stock that just needs a breather, right? Just needs a couple minutes on the bench. It's Joel Embiid, best player in the NBA. It needs a little breather. Yeah, more than likely, given the wide range green bar, given the rising moving average, given the support below, and given the average trading range, there's probably a good chance it's just resting. Probably a good chance it's just resting. So take that off. Now we see the whole picture again. Okay. What do we see? Lower high, lower high, lower high, lower high, lower lows, lower lows. Where is it happening? Ooh, baby. Right at the rising moving average. Right at prior support. And right at the low of the day. So it's a retest. It's a double bottom retest at minor price support, at a rising moving average with a bottoming tail and a change of color bar and a narrow body bar. Check, 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 check. In an uptrend. Gapping over resistance. Damn. Pretty good. Pretty good. That bottoming tail is the bee's knees, man. That's money. That's not some run-of-the-mill cheapo little bottoming tail. That's a proper bottoming tail, because a proper bottoming tail is 50% of the size of the bar or less. Or more. Sorry, my apologies. 50% of the size or more. So I want a bottoming tail that's at least 50%. 60, 70, 80 is better. This one's like 80%. The tail is 80% of the bar. It's awesome. It's awesome. Do you guys realize why that's awesome? Any idea? I'll tell you why. Bear with me for 10 seconds. Because at one point in time, it looked like that. Take a look. At one point in time, it looked like that. big ass red bar. Now, after the fact, it really looks like this. After the fact, right? Now, it looks like that. That's basically what just happened. Red bar here, engulfed by a green bar right there. That's basically what just happened. Take a picture of it. I've never put that on there before. Boom. That's what that bottoming tail, right? That's what that bottoming tail is like. It's that freaking important. And, oh my gosh, does it happen at the perfect spot. I'd be happy to see just the bottoming tail by itself. And then it happens at the moving average, at minor price support, with a double bottom retest. Oh, boy. My goodness. Man. It's good stuff. Give me the box of tissues. That's good stuff. All right. Now, bottoming tails. Here's another example of them. What do we have? First bar of the day. Some people, and this is where novices get confused. First bar of the day. But it's a red bar. It's not. You must, and I should have saved, let me see, maybe I can, hold on, maybe I can do this. Hold on, let's see. Yes, I can. Yay. It's not. That bottoming tail is that. That's what that bottoming tail is. Forget your little red bar. Forget about it. That bottoming tail is this. So are you going to go with a bar that's 80% green and 20% red? Because that's what the bottoming tail is. It's 80% green. Then, one wasn't enough for this stock. Bottoming tail, bottoming tail, bottoming tail, doji bar. So I'm just loving on this thing at 224. Get a little red, but it gets engulfed by the green. Triggers, actually goes about $1.75. Okay. Chops, 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 and then starts grinding higher. Doesn't look like much, but ends up being like a $4 move. I made $5,000 on this trade, and it was made possible, brought to you by Tide. Anyway, it was made possible by all the bottoming tails. It was made possible by all the bottom, because they are confirmations of strength. Not one, not two, not three. The green bar too. 3 or 4 confirmations of strength. After a gap up, of course. I'm not taking this in a vacuum. SPY was going higher also. Look at the SPY. Timed with the market. It's a New York stock. SPY is higher. Bottoming tails galore. This one, a little more aggressive. A little bit more aggressive. But it was in my favorites list. Google over 151. Had a nice gap. What happens? Stock leaves a little bit of a topping tail. Then goes bottoming tail, bottoming tail. Guys, when we get above the high of the day here, 151 right there. Okay, let me draw a little picture of it. Again, much more aggressive because it's on a 1-minute chart. But when you like the gap enough, and then you take out that, right? That's what that was. Once you break above this red line, rocket fuel, it's no different than what we said on Meta today. I said, guys, if Meta breaks 471, it's going to continue higher. And sure as shit it did. Another, I don't know, $2, $3 higher. Okay? $6,400. Bottoming tail, wait for the high of the day. Bottoming tail confirms the strength. Bottoming tail again reconfirms the strength. I like the gap already. I just want to get above all the resistance, get a little bit above these bars. Buy it right there. The other bars we could buy on the pullback because there was more confirmation. This one I had to wait a little. And it's still a little bit aggressive, to be fair. A little bit aggressive. Okay? Another one. There's a daily buy setup. Is it the cleanest buy setup in the world? No. But this is an old slide. Shit, Tilray. We haven't traded Tilray in forever. Right? This is an older slide. There's some support here on the daily. Pulls back, left a bottoming tail, red bar, and then it gaps up. I know you're seeing the red bar, but it gapped up over the red bar on the daily. I'm drilling down looking for an entry. Right? And what do I get? An immediate pullback that bounces. That's too aggressive for me. The first pullback is too aggressive, and I'll tell you why. Topping tail and a big-ass red bar. This bottoming tail is not potent enough for me to feel confident that it's going to take out this red bar and this topping tail. Okay? Topping tail, red bar. This bottoming tail is nice. It's not nice enough to take that out. So what do I need? I need more confirmation. And I get it. Tries to bounce. Boom. See that bottoming tail right there? Retest the low of the day. Little volume spike. See it right here? Little volume spike on that bottoming tail right there. Now, when it breaks above this area, I feel much, much, much better. $7.69, stop $7.49, bam. We just barely hit our target on this by about a nickel. Got $2,600 from it. Bottoming tails are potent. They're powerful. Now, this was yesterday. F you, NVIDIA. Sorry, I had to get it off my chest. Whew, got it off my chest. Okay, now, this is a gap down. This is a gap down, and a gap down and bullied. The first bar of the day was wide range green bar, right? Wide range green bar, okay? And then the stock peekabooed below, right? Bounced, pulled back, and then ripped. Now, this area is now tested 3 separate times. But it's more than that. It's more than that. Why? Because of the green bar. Buyers stepped up the second the market opened. The nanosecond the market opened, buyers stepped up. Pulls back, big ass bottoming tail. Bounces, gets choppy, no doubt. Retest. So bottoming tail green bar, big bottoming tail retest, another bottoming tail retest. The stock's going high. Now, the question is, do you get in at 936-ish or do you wait for 940? That's the $64,000 question. I got back in at 936. It was 936.50, I think, is what I had. I got back in because the first trade stopped me. I took an aggressive entry on this bottoming tail. On the 2 minute, 1 minute, it was a little bit of a buy. And guess what? It stopped us out by 19 cents. We had a $6 stop loss that stopped us out by 19 cents. Shitty. It happens. Even worse on NVIDIA, before it stopped us out, it went like 50 cents from our $6 target. It went like 90% to our target, then stopped us out by 19 cents and then worked. I got some on the second trade, not a full lot, partial. But this is what you call frustration. Barely miss your target, stop you out by just a few pennies, and then rip. I did get back in, but not a full lot. My point, though, was not that at all. The point was about the bottoming tails and how potent and powerful they are. This was a gap down that should have gone lower. And for whatever reason, the buyers were just stepping up, and this stock went another almost $20 from this area. Okay? Here's another example. This is Meta. A novice trader looks at this and says, it's a big gap down, it's going lower. And I'm looking at it as mega gap, mega gap. And in case you thought that this was just hindsight bias, I put my post in the chat room in. Just add 3 hours to it because I'm in Arizona, so it really means 9:22, 9:24, 9:25. All right? Long watches, 9:19 in the morning. That's 11 minutes before the market opens. No hindsight Monday morning quarterbacking here. Long, TER, RCL, ANET, Merck, Meta, long watch. Okay? 6 minutes later, Meta makes the favorites list, which are the best of the best. You take this entire list of 2, 4, 6, 7 stocks, 9 stocks, 11 stocks, 13 stocks, 12 stocks. Of those 12, I picked 3 faves. Meta was one of the 3 favorites. Am I just Nostradamus? Maybe I'm just lucky. Why was Meta on the long list to begin with? And why was it on the favorites list? That's curious. If you're a long trader, today could be a huge bounce if the market sells off quickly. Q's down $7.42. If we drop early, look for a bounce. This is in the same day we traded Meta. Guys, this is a mega gap in the market with a mega gap in Meta. This was an earnings gap on Meta, but the market also had a mega gap down. How often do we see the Qs close down $8 or $9? The answer? Very, very, very rarely. Once a year, twice a year, once a year. 240 trading days a year, and it happens 1 or 2 times. What does that mean? It's probably not going to be today. And Meta drops what? $70, $80? This thing closed at like $4.95 and opened at like $4.20. $75 drop. What did I get? A bottoming tail confirmation. Buy it at $4.20. Give it room. I did. I gave it a lot of room. And this thing sure as shit went up to $4.45. Went 5 to 1. There were multiple things that made this. Market mega gap down. Meta large gap down. Meta huge bottoming tail in volume to set the low. $5,000 trade. There's the call on it. Meta 420 by 415, 937. Meta targets are 425 and 430, 940. All this was before the market opened. You can't just say, oh, you just decided that last second. It's just not how it happened. Okay? Last slide. Last slide. In every trade, we need to have a modus operandi. We need a plan before we put our money into it. I want to say this, and I'll spend a moment on it. This business is no joke. You are up against the very best in the world. High-frequency trading machines, large banks, pension funds, very, very, very intelligent people in this business, as well as cheaters. So when you combine really smart people with more money and access than you have, co-location, billions of dollars, and some illegal insider trading and all that stuff, when you put that all together, you are competing in a very challenging playground. And if you come into this business and you just think you're going to wing it and make money, you are sorely mistaken. You need a trading plan. You need approach to this business. You need to hone your psychological skills, learn your personality traits, and put the time in to make all that happen and have discipline. What we're looking for in a trade is multiple concepts converging in an area. One is not enough. You want a discernible pattern, a 3-bar play, a buy setup, a breakout, a wedge, a triangle. You want bottoming tails for longs and topping tails on shorts and wide range bars, patterns happening at support and resistance, retracement levels to those support areas, change of color bars, why the balance of power is shifting from sellers to buyers and buyers to sellers. You want increased volume, ending volume, igniting volume. You want the stock showing good liquidity. I don't want to trade the stock that's super illiquid with a huge spread. I don't want that kind of slippage. That's for the birds. The stock's within its average trading range. I don't want a stock that's done 300% of its normal range and now you're buying the high of the day. Are you crazy? Stock is not up 3 or more bars on entry. Stock is showing relative strength or weakness, and try to time it with the market. You want all of these things if you can get them, or at most of them anyway. After getting those things, then, only then, can you look to see if there's an indicator confirming what you're already seeing. A moving average, perhaps. Stochastics, Fibonacci. I don't use them. Trend line would be helpful. VWAP maybe. But these are more important. Guys, too many people come into this business and they wing it. They think that education is a sham. People are trying to snake oil salesman them. They think they know better than the experts. For some insane, ridiculous reason, they think in 3 to 6 months they're going to be as good as somebody who's been doing it 10 or 20 years. I don't know why. They don't feel this way about anything else. They don't think they can beat Michael Jordan one-on-one, but they think they can beat Goldman Sachs one-on-one. Are you fucking kidding me? But you do, don't you? You come in risking $1,000 in your $5,000 account. $1,000 per trade, and you got like $5K in your account. Jared, this is my favorite. Jared, don't you trade any lower price stocks? All the stocks you trade are higher price. Well, why does it matter? Well, I don't have enough buying power. What do you mean? $5 risk only requires like a $500 account on that trade. It's a $3 stop loss on a $300 stock. You're going to buy like 1 share, 2 shares. It's $300. It's $500. $600. You don't have that in your account. Well, no, I need to do $100. Well, if you're doing $100 risk on a $2,000 account, you're not ready. But you think you are. Stupid is, stupid does, sir. Guys, I'm telling you all this for a reason. Does anybody know the main number one reason I'm telling you this? It's on the chart. It's on the screen for you. Because I don't ever want to see you featured in one of these segments. And remember, it doesn't have to be 300 grand to be nasty. If it's the last $10,000 to your name, then that $10,000 might as well be $1 million. I just don't want to see you guys blow up trading accounts because you're stupid. You are not going to pay your bills in this business in 3 or 6 months. I don't care what any Google advertisement tells you. It's not going to happen. This shit's hard. It's really hard. It's so hard I shouldn't be telling you how hard it is. But everything else is like that. So why are you surprised? Why are you shocked? You're not good enough to be in the NBA. When you come out of college, they don't give you the CEO position. They give you the trainee position. Why are you surprised? Why are you surprised? You shouldn't be, but you are. Yeah, but you don't understand, Jared. I only have 6 months of a severance package left, and I have to make this work in 6 months. The market doesn't care what you have to do or don't do. It is what it is. It will happen when it happens for you. For some people, it will happen faster because they get it sooner and they put more time and effort into it. For some people, they'll spend 5 years and still be a losing trader because they hack around at it. They don't listen, and they don't take it seriously. They treat it as like a passing little hobby. I've been doing this 20 years. It's fucking hard. There's not a day that comes in where I'm like, oh, this is easy. I enjoy it and I love it. There's a passion for it. And I expect to make money every day. But it doesn't mean it's easy. And you've heard me say it to you guys before, and I use the tennis analogy because I love tennis. Roger Federer years ago was on an unbelievable tear. The guy basically couldn't lose. And an interviewer was like, you make it look so easy. And he took offense to it. He's like, well, I don't know how it looks, but I can tell you it's hard. I may win a match and it looks easy, 6-3, 6-3. It's hard. I tell you, if I take a day off, they're on my heels beating me. 1 day off, 1 week off, and they're there beating me. What am I getting at? What's the purpose of this analogy? If you take time off trading because you think you're too good or better than everybody else, the market is going to come and slap you silly. You have to put everything into this to be great at it. And if you think you're going to do it any other way, I wish you well. I wish you well. You'd be better off putting your money in a total market fund at that point. So, I could talk about that topic for hours and hours and hours and hours, but I'll spare you the lecture. I hope today that you guys learned how important charts are, but more importantly, how important putting multiple concepts together is. One concept on an island doesn't really pay you out. 5 or 10 concepts put together pays you out. Support, bottoming tails, trend line, volume spikes, relative strength, market timing, those things, they pay you out. Don't take trades in vacuums. Make sure you look above and below before you enter a trade. Don't get caught in a forest that's on fire. All right? Bottoming tails are one of your biggest friends you'll ever see, topping tails as well, that you'll ever see in this business. You combine those topping and bottoming tails, those pictures of strength, with other concepts, you'll be unbeatable. I'm Jared Wesley of Live Traders. We'll get back at it again next week.